In this video, we're going to go over homeowners insurance endorsements. So in our last homeowners insurance basics video, we went over the main coverages on the structure and main coverages on the insurance policy. And today we're going to discuss this stuff in the middle, the endorsements. So we're going to talk about what it is, how does it work, what the typical endorsements are, and what do they cover. Let's start off with most homeowners insurance policies start with a basic form. So an insurance policy is a contract, and most start with a basic contract form. It just lays out the contractual obligation between the insurance company and the homeowner, essentially what the company will do in case of a claim or a loss. Most policies are built starting with that basic contract, and almost all companies use that same basic contract. Essentially, it's the foundation of the policy. And then from that basic contract, they'll add or offer endorsements to change that basic contract. So this is essentially how they add or remove or otherwise change the basic policy and change the coverages. This is the way that an individual, with the guidance of their agent, can better tailor their policy and their coverages to match what they need for their specific situation. One other thing to note, many companies make this a lot more confusing than is really needed, because they'll show in the endorsement section the changes they've made to the premium based on things like the age of dwelling or the age of the roof or deductibles. And that shows them taking their basic rate and changing it based on those adjustments, which really isn't helpful because we don't have much, that really doesn't adjust the coverage that we care about. So if you see me skipping over endorsements on here, it's just the coverage amounts, the premium amounts that are adjusting it, and so those are rating factors that we're just not going to go over because they're not really relevant to this discussion. So let's start off with, on here you've got golf cart coverage. You can add all kinds of different options, and I've added most of what I can get through a Tower Hill policy on here just so you can see what kinds of things can be added. Golf cart coverage, you can add golf cart coverage for liability and physical damage to the basic homeowner's policy. Below that is identity fraud expense coverage. So a lot of companies are now offering some identity theft reimbursement for expenses incurred as a result of an identity theft. Limited fungus, wet, dry rot. Most companies will include $10,000 of coverage per occurrence for fungus or wet or dry rot or other coverage like that or other damage that occurs that is fungus, wet, dry rot. Usually it's amount per loss and then a total amount per policy. Most companies will build in $10,000, not all, so it's important to look for it. Most will build in $10,000 per incident, $20,000 per policy. In this case, I've shown what the increase is. It's $60 to go from $10,000 to $25,000 per coverage, and then $25,000 per $20,000 aggregate to $50,000. Ordinance and law coverage. This is one of the more common ones, and we'll go over it in more detail later. But essentially, if you have building code compliance costs that you have to comply with as a result of a claim or when you're trying to do a rebuild, an amount of that is covered under your policy, and the amount is usually a percentage of the dwelling. So in this case, it's 25%. Below that, other structures. So if you have other structures on the property and you need more than the basic built-in amount, you can add additional coverage. So if you have a detached garage or a large detached pool or shed, things like that, you can add additional for that. Personal injury coverage. This is a liability enhancement. There are certain issues that are actually limited on the personal liability on the basic form, things like libel, slander, defamation of character, wrongful imprisonment. Those are excluded from liability coverage under the basic policy. This endorsement adds back coverage for those particular things that you could be sued for. Not likely, but again, they don't think it's likely easier. They're going to charge you $20 for filling that $300,000 gap. Personal property replacement cost. This is one of the big ones to look for. You want to make sure that your policy includes replacement cost coverage because without it, that $100,000 of personal property coverage, if it's not replacement cost, it's going to be depreciated or cash value coverage. So essentially, this replacement cost endorsement allows you to go get it brand new at Target versus having to try to hunt it up on Craigslist. So the depreciated value of your contents is a big deduction, so you want to make sure you've got this replacement cost contents endorsement on your policy. Tower Hill has one that says without holdback, meaning most companies will pay you the cash value for the item and then pay you the difference to get it to replacement cost once you've actually replaced it. With this endorsement without holdback, they'll just pay you the replacement cost whether you replace it or not. Refrigerated personal property. If your property spoils due to a claim, there's actually not coverage for it under the basic policy, or it's limited. in this endorsement you can actually add back $500 of refrigerated property coverage, so that if you had a spoilage situation, if your freezer went out, you'd at least have some coverage for that spoiled food. Scheduled personal property, you can schedule certain items on your homeowner's policy. Things that are commonly scheduled are jewelry or artwork or other rare memorabilia, collections, items, those sorts of things. In this case, it doesn't show it, but I've scheduled a $5,000 engagement ring. It costs $100 to schedule that specific item. We'll talk about scheduling in another video. Some companies will limit screen enclosures. Tower Hill includes an endorsement that endorses the basic policy to limit screen enclosures to $10,000. There's also another endorsement if you want to add more enclosure coverage. So, sinkhole exclusion. Most policies are no longer covering sinkhole damage. That's a whole other topic. But in this case, it shows the endorsement of sinkhole exclusion and a reduction in coverage as well. Specified additional amounts of insurance. This is for if the total amount of coverage on the house is not enough for a total rebuild. So if that $200,000 on this policy turns out to not be enough at the time of a loss for one reason or another, inflation's gone up significantly, the cost of building goes up quicker than the coverage on the house, or if we have demand surge from a storm, we have a major disaster and the cost of building supplies goes way up, this endorsement gives you a 25% bump over that $200,000 amount. Water backup and sump discharge and overflow. This is an unusual one, but it's a pretty commonly added back endorsement. Essentially, the basic policy does not cover water that backs up into your house through your sewer and drains. This endorsement gives you back coverage for typically up to $5,000 for coverage as a result of water that backs up into your house from your sinks and drains through the city sewer. So if the city sewer goes backwards and into your house, there's coverage for it with this endorsement. Without, it's excluded from the policy. Those are just some of the endorsements you can add onto a standard homeowner's policy. In the next video, we'll talk about endorsement packages and go into depth a little bit more on what some of those endorsements cover.